Michael Arone is chief investment strategist at State Street Investment Management. They have a cool $5 trillion in assets under management. Why, Michael, is nothing stopping this market?
So I think there's a few things. Certainly, you're going to see improvement on trade. So more trade deals keep getting announced. I think USMCA will be negotiated later this year, and Canada and Mexico are in great shape on trade deals. So that's improving. You get a free cash flow windfall from the One Big Beautiful Bill. That's going to also be a tailwind for many companies, particularly those that spend a lot on R&D. And you have the dollar weakness. More than 40% of the S&P 500 revenues come from outside the U.S. That's working as a tailwind, especially for technology companies. The Fed's going to be cutting rates, and we've never had a recession when earnings have been growing year over year, and they will grow year over year. Put that all together, Brian, and I'm optimistic about the balance of this year.
So do we need the Fed to even indicate, sort of hint, whatever, on Wednesday it might start cutting rates, or does that even matter anymore?
I don't know if we need it, but I think we're going to get it. You're certainly likely to get a dissent from both Waller and Bowman. It's the first time you'll have two Fed governors dissenting on an interest rate decision in more than 30 years, way back in 1993. So you're going to have this additional pressure. I think Powell has an off-ramp here. I think what it is he was saying that trade policy was uncertain. And now all of a sudden you have deals with the UK, Vietnam, Indonesia, Japan, Philippines, and EU. They're promising a breakthrough with China. And as I mentioned, I think you're going to get USMCA negotiations later in the year. And I think that provides the clarity the Fed needed to begin or resume cutting rates again. I think that's what they're going to tell you this week.
We're going to talk about, I don't want to steal Dominic Chu's thunder. We're going to talk about it a little bit later on in the show. But on Thursday, it's not getting any attention at all. An appeals court will hear hearings, oral arguments about the legality of these trade deals. It's not getting a lot of attention, Michael, but there is a small chance that these deals that the market loves will be invalidated as being illegal. If that were to happen, is there a market risk?
Well, there may be a risk if we go backwards on trade, Brian, but here's the thing. The reason no one's paying attention to it is the Trump administration has a number of other tools available to it to pass tariffs. So you'll remember the Court of International Trade in May said these things were illegal. Ultimately, you could see a similar agreement or a decision here in the courts. That would make it difficult for the Supreme Court to kind of overturn those two courts. But, Brian, the Trump administration has Section 122 in the Balance of Payments Authority. They have Section 322 in a different kind of part of the law. And both of those will give Trump administration wiggle room to continue on their tariff reign, so to speak, or their tariff methodology.
So what then would be the risk to the market, Michael? There's always risk out there.
Absolutely. I think one of the things we are seeing is we're entering a seasonally weak period. So we know August through October is difficult. You will see as the Treasury rebuilds the Treasury general account, that takes liquidity out of the system. There'll be a little bit of a drain. So, Brian, I think what's being a little bit overlooked this week is you're going to get an announcement today at 3 o'clock about how much they're going to borrow. It's going to be a lot. They're going to increase the third quarter. And then on Wednesday at 8:30, you're going to get how are they going to borrow it. And so from that perspective, you could see interest rates move at a time when the Fed maybe isn't cutting, and that could cause upward pressure on rates. I think that may be the biggest risk to this market going forward.